Hi, everybody, and welcome to the latest Trivium China Flash Talk. I am co-founder Andrew Polk, joined as usual now by Denny McMahon, our head of markets research. Denny, welcome. Good to have you on as always.
Great to be here.
We did one of these updates 3 weeks ago. They're meant to be fortnightly, but we missed a week last week. And so we're doing a makeup week today. And these are, Jenny and I are going to start doing these regularly, just talking about the latest developments that have happened, particularly on the economy. Every 2 weeks, keep them quick, let our clients know what's going on. We may broaden out the topics a little bit, bring in some other people throughout Trivium for politics and other things. But to start, we're going to focus mostly on economic and financial developments. You can see that I am in pre-vacation mode with my bushy beard. So I'm going to be off on holiday next week and excited to get away. In case you can hear some of the gravel in my voice, a quick update: the Trivium team was all in London last week. The senior leadership team looking to set out our plan for the year. So we've got a bunch of exciting things happening for our clients. But at the end, it was a great week. We all got to see each other for the first time, many of us in 3 years. So people coming out of China, people coming from the US, all descending in London. And it was great, but at the end, most of us got COVID. So, I feel like half of our webinars have some element of COVID impacting them recently. So that's our latest COVID impact. Interestingly, though, it was actually the folks who were in China who didn't get COVID, right? Because they all had in December. So it's all the non-China based people now with COVID, which I think is just reflective of kind of how everything's changing very quickly still on the COVID front in China. So just an anecdote for what it's worth. The antibodies seem to be fairly robust out of our limited data set for folks traveling out of China in the past few weeks. So with that, no other real housekeeping other than to say, please share these webinars with colleagues who would be interested, other potential clients. Word of mouth obviously is one of our greatest avenues for growing our business. And with that, I'll jump right in. So long preamble to set up what is kind of a pretty weak thesis, I guess, this time around, which is our view hasn't changed a lot in the last 3 weeks. And that is that China's economy is in for a good year and investors don't really have to overthink it. Much of the rebound in growth, in our view, is going to be what I'd call sort of natural, right? On just how economies come out of a COVID-induced lockdown or a COVID-related lockdown. People come out of that, they want their lives back, they want to spend their money, and they want to consume, and they want to get back to normal. And so far, that was our thesis last time, or that was one of the things that we shared when we spoke last time. But so far over the past few weeks, that only continues to seem to be the case. We will talk a little bit today about kind of some of the things, most recent things the government has done to kind of front load some of the activity and kind of help boost that natural rebound, if you will, to get things going here in the early part of the year. And then I think they hope that it kind of carries on naturally later in the year. That will include stuff around consumption and then the latest kind of numbers around special purpose bonds. But that's kind of where we are. Still pretty positive outlook for China this year. I think the consensus, that's kind of where the consensus is. But in this one, you don't have to overthink it. After a rough 2022, 2023 is shaping up, we think, pretty good. Let me stop there. Denny, anything on that overall view that you want to add or anything I missed?
No, you haven't, but this might be a good moment to start talking about consumption, given that's the sort of the biggest part of people's expectations of what this rebound is going to look like. So with consumption, it's interesting because when Chinese officials are talking about consumption these days, and they talk about it a lot, there are actually two different issues that are at stake here. So one is about getting the economy going with a rebound in consumption after COVID. And at the same time, there's also a lot of talk about making consumption a long-term driver of growth that requires some fairly fundamental restructuring of the way that the Chinese economy works. And so these two policy debates and these sort of two sets of statements or types of statements are sort of like kind of coexisting at the moment. I think the best example of that is Xi Jinping's address to the Central Economic Work Conference, which was in December, but we got kind of not the full speech, but an abridged version of the speech, which was still significantly more than we got back in December. And he talked a lot about consumption. I mean, in the version that we got yesterday, this was the first cab off the rank, the thing that he really, identified as being the key issue. And here he was kind of talking about both of those strands of energizing consumption. So on one hand, he said what really needs to happen is that wages and income needs to go up, right? So of course that will help the current rebound, but really at the heart of it, this is a structural adjustment that is more long term, and the focus is very much on low and middle income households because they typically spend a lot more than sort of China's rich. And then the second explicit measure, the way to promote consumption that he talked about, was about increasing consumption credit, consumption loans. And that was quite interesting because already we've seen with China's banks in January, we saw a reduction in interest rates on consumption loans. But I think what you're going to see though is that, trying to get Chinese households to ramp up their borrowing to consume over the long term, certainly over this year, is going to be, I think, fairly difficult. Largely, well, certainly in the early months, because people are still, what happened over COVID is that people were uncertain about job security. We still have fairly high youth unemployment. People are currently paying down their mortgages at the moment. If anything, they're trying to repair their balance sheet so that, family finances are in a better position. So I think we're a little bit wary that boosting consumption, lending for consumption-based loans as going to be a real driver of consumption this year. We'll take a wait and see approach, but my inclination is this is not necessarily going to be the big driver. Now, on the other hand, we've also seen a wave of policies come out from the provinces. So prior to the two sessions, the National People's Congress, which occurs in March each year, all the provinces have their own NPCs, their own congresses. And as part of that, they roll out their annual work reports and their budgets for the year. And as part of that slate of new policies, we've seen most provinces kind of tackle this consumption issue. And if there's been any consistency, it's fallen into two areas. Firstly, local authorities are very enthusiastic about throwing resources towards stimulating tourism, whether that be in the form of cutting entry into tourist destinations, cutting the fees for entry into tourism destinations, or providing subsidies to firms in the tourism sector. Now, certainly they've had a really bad run over the last few years, so any sort of government support, as much as anything, is geared towards putting them in a position where they can make the most of a rebound in tourism demand. So that's one side of things, tourism. And the other one is consumption subsidies. Now, to a certain degree, this is kind of going towards things like white goods, home appliances, but really the biggest or sort of the widest slate of consumption subsidies we've seen is for the auto sector. However, again, we're kind of reserving judgment on just to what extent this is really going to increase consumption, because a lot of these subsidies are extensions of pre-existing subsidies, and some of them have only been extended or are in place up until the end of March. So I think what's really happened is that local authorities have kind of extended measures that they've kind of tried to stimulate consumption in the past. And secondly, I think they tried to really try and make the most of the Spring Festival holiday period by sort of, rolling out tourism support early on. From here, I think the real next step is I think they're going to take their cues from Beijing. When Beijing starts coming out with more specific policies themselves or more specific policy direction, then local governments will kind of have a better sense of what's expected to them, and we'll see an additional range of support. So I think that's where we are at the moment. Clearly, consumption as a driver of growth is front of everybody's mind, both short-term and longer term. We've already seen early measures to kind of help sort of boost consumption this year, but they've been partial, they've been relatively short-term. I think we can probably expect more in the next month or so ahead.
Yeah, that's all. There's a lot of threads to pull on there. That's all really great. And I actually want to tease out a few of these things. Just for the viewers, Denny pulled a fast one on me because I had consumption as the last bullet point in our outline today, and he decided to move it up front. So I'm adjusting. But no, that I think you're right. That is the place where we should have started, because it is absolutely top of mind, as you're saying. I think you're also definitely right to emphasize that there is still a moment of uncertainty. Like I started by saying, people do want to normalize, they want to get out there. And I think that is still true. But you're right, there is still this moment of uncertainty, as we're just on the back of the Spring Festival, the Chinese New Year holiday. Unemployment is still high. The economy isn't great. I think there is still a relief. We're on the back of the zero COVID policy, but it's a good point. And I think your point is basically that officials understand that they need to make a handoff between where we are now to get people to a place where they're comfortable, basically realizing the goals that they want: normalcy, more consumption, getting back out there and pulling out their wallets. And so a lot of the efforts, as you say, I think are kind of meant to kickstart that process, but they're piecemeal. And I guess I think it's interesting when we'll take the short-term measures first. Beijing just really it's not really in their DNA to do centralized consumption supporting measures for the most part. And so that's why you see these local governments really jumping to, obviously, city level, to some extent provincial level. And it will be interesting to see what specific measures Beijing can roll out or is willing to roll out, or if it's more just messaging. Because my sense, like you say, is that kind of it's very notable to me that Xi Jinping and Li Keqiang, not that Li Keqiang matters as much right now, but Xi Jinping's out there saying, we got to get consumption up. But he's not, the central government and the party aren't really doing much. So I wonder if part of it is they're just kind of, this is the new messaging. Xi Jinping's saying it. And so that's just the message to the local officials, like, this is where you need to be focused. Or if the central government will start adding some actual policy heft here, because traditionally they don't do that. And even, I think, I forget which official it was recently, they have reiterated multiple times, and a senior official that's escaping me right now reiterated it again recently: cash handouts aren't happening. They view that as inflationary. They view it as inefficient. And so, like, the kind of biggest bullet in that gun, if you will, is off the table. So, I'm interested, we don't know exactly what that's going to look like, but what are your thoughts on that kind of central local dynamic? Do you really expect that the central government may actually roll out some more concrete type things, or you think they'll leave it mostly to the localities and play more of a messaging role at the center?
What you said is absolutely right. Traditionally, this is the stuff that gets passed off to local governments. And to be honest, I'm not quite sure what the central government could or would do here, particularly if they decide particularly if they have legitimately washed their hands of vouchers, if they say this is not the way that they're going. I think so often when Xi Jinping talks about consumption, it kind of fits a lot more into this common prosperity, reallocating wealth, big structural changes, which requires boosting social security, increasing the wages of civil servants, ensuring people get better returns from their financial assets. It's almost that top level economic structural readjustment stuff, which is about ensuring the long-term stability and growth prospects of the economy. When it actually comes to putting money in people's pockets today as a stimulatory measure, because there's a general agreement that property is not going to drive the economy and this year, and that exports aren't going to be what they used to be, and that maybe we juiced infrastructure too much last year that we can't rely on again. They're in this really unique position where pretty much the only thing that's really going to drive growth this year is consumption. They've never really been in this position before.
That's a good point.
And so it's like, well, what do you do? Are we going to see for the first time the government really step in and go, okay, this is time to shine. This is how the central government stimulates consumption. And if they do, it's going to be new. And frankly, if it is true that they're not going to do vouchers, then I'm not really sure what else they can do. I mean, we've seen a lot of vouchers at a local level as well, but they've been really, really small. Quite interestingly, I've seen an argument made by Chinese economists that the provinces, particularly in the central provinces and the western provinces, are very disinclined to hand out sort of open-ended vouchers. If they use them at all, they're very targeted, because they don't want people going out and simply buying stuff that gets manufactured in the eastern provinces. That really, as is the case with local governments always, whenever they roll out stimulus, they want it to sort of rebound back immediately on their own industrial and manufacturing and productive base. So relying on local governments to use that tool of their own volition isn't necessarily going to happen. And of course, the other issue here as well is local governments are already financially stretched. I mean, I'm kind of quite keen to see whether this year with the budget, when it gets rolled out in March, whether the central government is willing to increasingly take off some of the fiscal burden from local governments, because I mean, after the last few years, they've really stretched. So can you kind of then expect to kind of keep pushing the burden back onto local governments to kind of come up with new, creative ways to put money in people's pockets? Surely this is now the moment that the central government takes responsibility. But of course, this is all just speculation. I don't have a good sense as to whether it's going to be different this year.
Yeah, that's a good point. And I'd say, I mean, just to help listeners and viewers out with a few things. One is, so March 5th, about 3 weeks from now, is the annual government meetings, the two sessions. That's when we'll get really a little bit more meat on the bone of what concrete policies are going to look like this year, from the NDRC, from MOF, the budget, things like that. So that'll be a really important one. Do they make a concrete, promise or a concrete goal on consumption? Do they put some concrete policies behind it? What ministries are tasked with that kind of thing? I mean, that's kind of another question. It's not even clear, like, which are the right ministries to really kind of support this thing. So that'll be a key one to watch. I'm kind of with you. I would expect, something in this realm to move forward, especially given, we know how the policy now works. Is Xi Jinping starts talking about something, the ministries and agencies, they start figuring out how to do it. If she's talking about it and he's saying consumption's number one this year, folks listen, right? And they respond. And so I'd be surprised if we don't see something policy action on this from some of the ministries at the two sessions in March. But that'll be a key one to watch for sure. Just FYI, we'll talk about this more at the time, but the two sessions is going to be kind of a beefed up two sessions every 5 years. Right after the party Congress, there's a government reorg, so we're going to see a lot of people moving around. We may see some changes in how different ministries report and things like that. The last time this happened was 2018. It was a really big reorg, but also something to be on the lookout for, especially since we have a new leadership team. A lot of moving parts here. And it'll be interesting to see, what the central government does. My sense still overall, as I said, is like people are going to find a way to normalize. And the goal for the government is just to kind of help smooth that handoff to get from where we are in mid-February to where we expect to be in the spring. in terms of getting people out there and getting life normalized and allowing people the sort of certainty and the confidence to go out and spend their savings.
Absolutely. And could I also say, Andrew, I think
please.
if we're looking at those provincial tourism boosting measures that I was talking about before, that's partly about encouraging people to spend, but it's also partly about the provinces trying to capture as big a share of people's tourism spending for themselves. So it's not necessarily about getting people to spend more than they otherwise would have. It's about Yunnan ensuring that they get a bigger share of the tourism dollar than Sichuan otherwise would have. So.
Yeah, and I was going to bring that up actually, and I mean, partly because of the big question, right? Okay, if let's say we stipulate we agree with Xi Jinping. Don't quote me on that, but let's say we agree with Xi Jinping that consumption's the big variable this year. It's the thing that we either will or won't drive the recovery, right? Like that's going to be and what I mean is like it kind of the recovery hinges on really consumption. I think is a good way to put it when you put it that way. And so the debate, I think, in the markets is like, how strong are the consumers going to come back? Of course, part of that is about like what the government's going to do. And that's why the point you made is so important is, if it's left at the local level, it's not really about boosting consumption in aggregate. It's about capturing as much of the consumption rebound as you can, right? And so for now, the provincial level numbers or provincial level measures are less about boosting that aggregate and more about getting the highest proportion for that locality. And that's why it will be so important for the central government to play a coordinating role. And hopefully we'll see something soon. The other big piece on how big is the consumption, push going to be is, the issue of the excess savings, which I believe we talked about on our last flash talk, but there's a record flow into household savings last year. There's a lot of debate around how much of that was pulled out of the property market, how much of that was formerly in WMPs, and with the bond sell-off happening, people were moving that money just into bank deposits because they were getting better returns there and they're more stable. And certainly, so it's not all just money that people have been squirreling away and ready to pull out. It was partly investment money. What's your sense on that? We've talked, like I said, we've talked about it before, but do you have a view on the excess savings? I know you've done some looking at that side.
Frankly, Andrew, the more I look at this, the more I'm less certain about how much is excess, because everyone's looking at last year because that was a huge increase in savings. But, savings were low, saving increase was low in 2021, but it was high in 2020. But really over the last 3 years, you would assume that people's relationship to spending and changing has been more conservative. So should we be looking at the last 3 years of savings for some sort of idea of excess savings, or, maybe not so much in 2021 when things seem to be opening up? Were there excess savings left over from 2020? And then of course there's this question of, even if we came up with a figure for excess savings, what percentage of that was for low and medium income households, and what percentage is China's, more affluent? Because, in terms of what's going to be spent, anything that's been, any excess savings from middle and low income is more likely to get spent than, China's rich, which is more likely just going to be ferreted away. So coming up with a number, if anything, just seems to be getting harder and harder. But I think it's fair to just say that there is a lot of money sitting in the banks at the moment. Some of it's going to be reallocated to wealth management products in the stock market. Maybe some of it will get reallocated soon to the property sector. But there's still going to be a lot there where people, as they become more confident about employment, about the stability of their jobs, and are just more willing to spend it.
Yeah, well, that's a good point. And I'd say, the kind of the way it's often talked about is there's a lot of dry powder out there, right? And normally you'd think about dry powder as potentially fueling, asset prices. I think a big chunk of that dry powder is going to go into consumption, but also a big chunk of it is going to go into assets. And so ultimately, again, my view would be that consumption will be strong. We can debate how strong, but high single digits, I would think at the least in terms of growth in the second half of the year, if not even in Q2. Especially off of the low base of 2022. But the point, obviously, for many of our clients, the investor set is going to be, well, if some of it's going into assets and some of it's going into consumption, and what you end up with is a rebounding, economy because consumption's strong, but maybe not as strongly as it could be, but also money going into Chinese assets. It's all kind of a positive story for Chinese assets, right? Equity markets, the currency, potentially property. So it all, to me, sort of adds up to the same kind of view of Chinese assets look set to perform quite well this year. They've already performed pretty well to date, but I think there's more room to run, would be my view. So I think we've covered most of the consumption piece. The only other thing, when we talk about uncertainty, one of the things adding to uncertainty is we're in the annual data black hole, right? Where there's no economic data released for January. Really, there's like inflation data, but no trade data, no investment data. So it's a little bit difficult to get a read on exactly where we are, sort of 6 weeks into the year. But the two things that we can see are what's happening on the fiscal front and what's happening on the monetary side. So we do have the credit and monetary data, and the fiscal data. And the other thing, the other thing that the central government is doing to try to hand off the recovery is definitely front loading on the fiscal side when it comes to SPBs, special purpose bonds. Can you walk us through the special purpose bond data and kind of what's going on there, that clearly the government's trying to make Q1 pretty solid on that front?
Yeah, absolutely. So each year, the government publishes or allocates the annual quota for special purpose bonds during the National People's Congress, which is mid-March this year. And so special purpose bonds are what the provinces, the local governments get to issue in order to fund the construction of public works. Now, of course, the problem with issuing a quota for infrastructure investment at the end of the first quarter is that, well, what are provinces supposed to do for the first 3 months of the year? So the tradition, I think, going back to 2016 is that they issue a preliminary quota, usually at the very end of the previous year, which is supposed to tide the local governments over for the first 3 months. Last year, that preliminary quota was about 1.4 trillion renminbi. The eventual annual quota was 3.65 trillion. So that first preliminary quota was maybe 40%, maybe a little bit less than the annual quota. This year, the local media has reported, based on sort of collecting all the individual provinces' preliminary quotas, is that it's already above 2.1 trillion. So total preliminary quota this year, over 2.1 trillion. Last year, it was 1.4 trillion. Now, that preliminary quota, it's not supposed to be purely issued in the first 3 months of the year, because the expectation is that local governments need to make plans. It needs a longer lag time, so it's expected to be used by the end of June. But still, this is a really big front loading of the SPB quota compared to last year. Now, as I said before, last year's full year quota was 3.65 trillion. Then at the end of the year, because the authorities were worried about the pace of growth, local governments were allowed to issue an additional 500 billion. Regardless of how you see it, telling local governments that they've got more than 2 trillion to play with now, even before the MPC, and they've got 6 months to spend it. That is a lot. Now, we're not entirely sure what the SPB quota is going to look like for the full year. Our sense is that it's going to be more than the quota last year, but less than the full amount that local governments ended up issuing. So that'll be more than 3.65 trillion, but probably less than the 4.1 that they ended up being allowed to issue. It would be sort of probably high 3 point somethings, maybe 4. And the reason we say that is that our expectation is that they don't necessarily want infrastructure to be driving growth again this year. I mean, infrastructure growth was something like over 11% last year, and that was the fastest expansion since 2017. You can't keep doing that year in, year out, particularly with a shrinking population, and particularly on the back of what has been a 20-year plus rapid infrastructure expansion. Now, Beijing keeps coming up with new places that it wants money to be spent on infrastructure, and at the moment it's things like transportation, it is on utility pipes in the cities, it is on water conservation. It has its priorities, and there's still, as far as Beijing's concerned, there's still plenty of things to spend money on. But at the same time, they also want to ensure that the things that local governments are building with this money are capable of generating a sufficient return such that local governments aren't burdened with debt that will never be repaid. So there's still this kind of natural limitations. So on one hand, we think that they really want to front load the infrastructure investment this year. They probably don't want to overdo it for the full year, but what they're hoping is that come mid-year, there will be less need for aggressive infrastructure because, as Andrew's been talking about, the economy will have picked up speed by then, in large part led by the revival in consumption. And of course, if things aren't going so well by the end of the year, then I wouldn't be surprised if we saw a repeat of last year, and they can push out kind of a supplementary SPB quota. Last year was the first year they've done it. Now that they've sort of established the precedent, it's no biggie to do it again. But I think that's what we're looking at. Front load it now, get the economy humming, and then back off as they hopefully becomes apparent that it's not needed anymore.
Yeah, no, I think that's a great summary of where we're at, and couldn't agree more. I think the only last piece is the monetary side, and we're starting from very low levels of growth, but already it's pretty clear the banks are getting the message, like, you need to be involved here too. And so we had record new loans in January. I mean, that often happens in January. So, I mean, every year you're going to get more loans as for the year. And January is always the biggest month of the year in terms of new loans, because banks quotas reset and those kinds of things. They want to get the money out the door early. So it's not surprising that January was the largest month, largest monthly new loans ever. It often is. So the past few years have been a little weird on that front, but I remember for about a decade, every January, the headlines were most loans ever. And it's like, of course, yeah, I would expect there to be the most loans ever in the January of the new year. But still kind of shows that they are getting the message and they're getting on board. Overall credit growth accelerated from 9.6% to 9.7%. It's only a small tick up, but I think we're going to keep seeing, up to 10%, maybe, in the next few months, in the next couple of months, and likely getting to 10.5, 11 by mid-year. For context, below 10% credit growth for China is very, very low in terms of outstanding new credit, outstanding credit growth. And so single digits is largely down to the fact that the economy was so poor last year, no one wanted to borrow, right? So this is about loan demand. And to Denny's point, you need to work both sides, and infrastructure in the early part of the year will be part of that. But then, households will come back. There will be consumer loans. It sounds like Xi Jinping is pushing. And then, you look at property. Do people start buying property again? So you need to find some places where you can juice loan demand. I think in the early part of the year, like we said, they'll do that in infrastructure. But either way, banks are going to be pushing, right? They're going to want to get more money out the door. We should see, pretty steady increase in credit growth. And that will just help this whole narrative, this whole story, the whole trajectory of the economy is if credit is pushing in the right way, fiscal is front loaded, And there are, even if nascent, some early signs that provinces are trying to boost consumption. That's the government trying to get this recovery moving. And I think, again, my view would be that they're going to be pretty successful, and that, the economy coming out of zero COVID is going to look good. But the key here is just like, how do we do the handoff? And I think those are the three elements. Like, get credit into the economy, get that growing more quickly, front load those SPVs, get some infrastructure spending, do some level of consumption support to help move us into that more natural resurgence of growth that we'd expect after a terrible year like 2022. So I think that's where we are. Anything I'm missing in that story, that kind of narrative or trajectory, Denny?
No, Andrew, I think that covers it all.
Great. Well, thanks so much for joining me as usual. We'll be back again in a couple of weeks with all the latest. We've luckily done this whole flash talk without a single balloon pun, which is good. I think most China-focused flash talks have fallen into that trap over the past couple of weeks. But Denny, really appreciate the time. Thanks everybody for listening or watching, and we'll be back in a couple of weeks. And in the meantime, please email myself or Denny, or you can email hq@tribunechina.com with any questions. We're always happy to talk to clients directly on any of these issues as well. All right. Appreciate it, Denny. You have a good one.
Same to you, Andrew.
Yep. Take care.